If you are only buying the S&P 500, your growth is about to be cut in half. Large cap stock like Apple and Google are slowing down. They are huge, stable, and slow. The real opportunity for explosive 10x return in 2025 is hiding in small cap stock. This is the market rotation no one is talking about. We are moving from the safety of the giants to the potential of the little guys. Are you ready for the secret shape that could multiply your money? For the past decade, mega cap tech ruled the market, but when a company is already worth $1 trillion, it is mathematically hard for it to double. That's why the S&P 500 is become less of a growth play and more a safety play. But this week, two major trends have converged to change everything: valuation and interest rate. Small cap stocks are currently trading at a deep discount, making them 30% undervalued compared to large cap. This is the biggest valuation gap we've seen in years, and that is your profit margin. Why is the shift happening now? Simple, the Fed. When the Federal Reserve cuts interest rates, it immediately helps small companies more than large ones. Why? Because small companies rely more on borrowing money to grow. Lower rate means cheaper loans, more expansion, and faster growth. This is the recovery indicator flashing bright green for small caps. However, you must careful. Investing here is not for the faint of heart. Small caps are volatile. They can drop 30% faster than you can blink. But the volatility is where the 10x opportunity are born. How do you manage the risks? You don't pick individual stocks. You buy diversified ETFs to gain exposure to this explosive growth without betting your entire portfolio on one tiny company. You need ETFs. Here are our top three picks. Number one, iShares Russell 2000 ETF IWM. This is the flagship small cap ETF. It offers high quality liquidity and exposure to 2000 small companies, pure diversification. Number two, Vanguard Small Cap Value ETF BBR. This is the smart play. It focuses on small companies that are currently undervalued, potentially offering a better risk to reward ratio. Number three, Aventis US Small Cap Value ETF AVUV, a favorite among active investors. It uses a slightly more aggressive, research-driven approach to select the best small cap value stock. These ETFs turns a high-risk individual stock pick into a manageable, high-potential strategy. Before you click buy, remember the risks. Small caps are subject to massive swing. You must commit to holding this investment for at least 5 to 10 years to truly reap the benefit. Do not invest money you need next month. Small caps are cheap. The macro investment is turning in their favor, and the potential reward is huge. Stop buying the same old index fund. Now is the time to rotate. Subscribe to PassiveMint and click the video on the screen now for a complete guide on how to pick your first high growth ETF.